good time to take you through some earnings. Remember, the last leg of the earnings season was extremely disappointing. BGR Energy should be up on your screen. Today the stock is up for 3%, but in the last 1 year, the stock has lost 40% of its value. And in this quarter gone by as well, the numbers were quite disappointing that the company reported. The EBITDA margin slipped all the way to 13.7% from 16% plus, and the net profits as well were down about 24%. So let's get a take from the management themselves. BG Raghupathy, the Chairman and Managing Director of BGR Energy, joins us to talk about that. Mr. Raghupathy, good afternoon, and thanks so much for being with us on the show. First, if you could give us an outlook on where your margins will be at by the time FY13 closes up, and in the first half of FY14 as well. Do you think it will be under pressure as more competitively bid EPC and some of your BTG orders start contributing to your revenues?
The end of year 13 would be under pressure, but we would recover by middle of 2014. EBITDA as well as PAT.
Okay. Mr. Raghupathy, on what are you basing this confidence? Are the fresh pipeline of orders of a higher margin? What is the nature of those orders?
Right. We will be executing the Sholapur and major NTPC boiler orders, where we have improved our margin by the bulk purchases, as well as we are expecting a BOP contract. I am unable to share the name of the customer. It's about 1,700 crore. We are clear L1, and it will be announced. We will announce when the customer announces the result.
Okay. So by the end of calendar year 13, where do you see your order book at, Mr. Raghupathy?
13,578 crore is the end the order book by the end of the year 13.
That is a little lower than the 14,000 you told us at the end of the second quarter. So should we worry that orders are not really breaching that 14,000 crore mark?
You have to look at in a macro level. Not many orders are getting finalized in the country. Under these circumstances, the largest tender was NTPC tender, where we had taken the maximum number of orders. And there are many orders, many projects which are coming up. For example, Mahagenco, Tangetco, again MP Genco, Mahagenco again for Nasik, Tangetco for Katipalli, Tangetco for Udankudi, Epigenco Vijayawada 800 megawatts, RRVNL Banswara 660 megawatt, MP Genco 660 megawatt, and Haryana. So there are many projects which are going to be finalized by the middle of the 2014 also.
Okay.
So we, as usual, in the past our strike rate had been good, and we expect to continue the same.
So at least 50% of these guys don't have money. Tangenco has not been paying at all. We're looking at such serious power cuts in Tamil Nadu, Tangenco orders, even Haryana Genco. So, are you really confident how many of these orders will hit the bidding ring?
We will bid only if they achieve financial closure. And the customers are confident of achieving financial closure. So
no, my question is really in terms of, do you see the order pipeline improving? Considering the problems that I'm enumerating, it's not got anything to do with BGR or the capital goods companies, but given the power situation and the status of those who will put up power plants, do you expect that even in FY14 you're going to see order book increasing? Is there any visibility?
Yeah. FY14, these orders plus many NTPC orders will be finalized. Now, in case the state governments accept central government proposal on the financial remodeling, then there is a much better scope. That will lead to they getting payment from electricity, IPPs and state generation companies getting payment, which will help them to go for new projects.
Okay. When you say margins will recover, sure. When you say margins will recover by FY14, Mr. Raghupathy, do you see it recovering back to those 16-17% levels, or do you think that's a tall ask given the kind of situation that we're seeing in the economy?
Margins will not increase to 16-17%. Certainly not. Particularly in a short period of 1 year, that would take time. Margins, the maximum can increase to 8%.
Okay. What about the implementation schedule of the NTPC orders itself? Because there are some slippages on your capex plans as well. Can you give us a timeline of the NTPC order implementation? Will that also be under pressure, the implementation timetable?
Yeah, the 48 months from the date of letter of award is the delivery period for each boiler and turbine.
Okay.
We signed the MOU with the Tamil Nadu government for the project for the manufacturing plant on November 5th. And the government issued the orders in December. Now the land is being transferred to us. We already have 50% of the land as a private land. The balance is being transferred today, and hopefully by March, April we will start the construction. We are importing all the initial orders, like 4 or 5 orders, pressure parts from our collaborator Hitachi Power Europe, Germany. The balance we manufacture here, the non-pressure parts and other bought outs. Similarly for the turbine, the complete turbine generator comes from Japan, Hitachi Japan. We manufacture the balance of the plant, including engineering, design, engineering, everything.
Okay, just one final question, sir, before we one final question before we let you go. We're running out of time. If you could just give us an update on the interest cost run rate that BGR Energy will clock in, because that has been denting your profitability quarter after quarter. How much do you think interest costs will be at?
About 9% today. Interest cost.
Interest cost is about 12%.
Yeah, it's about 12% at the moment. We will be collecting. We target to collect about 500 crore before March end from our various customers, and this would reduce our interest burden very much. It will help